I'm Eric Lipsey, and this is Galt University. Today, I'm here with Rebecca Milliken of Castle and Cook Mortgage. How are you doing today, Rebecca?
Good. How are you doing? Hi, everyone.
Good, good. I'm excited to have you here today. I know you guys are super busy in the mortgage industry right now, so it's really great that you were able to make the time to come on today. And today we're going to be talking about, we're going to be discussing the topic of helping entrepreneurs get mortgages. Like sometimes when we start out and we want to buy a house, there are so many things we don't see or we don't know, and we get to the point of trying to apply for a mortgage, and all of a sudden we're rejected for a number of reasons, just because of things, nothing that we did necessarily wrong, but things that we just weren't aware of. But before we get into that, I wanted to ask a little bit about your background. Maybe you can tell us a little bit about how you got started in the mortgage industry.
Okay, so I got started in the mortgage industry about 3 years ago. I was a loan officer assistant, so I worked in a busy, small Colorado lending. It was called M2 lending at the time. And then I switched over and I became my own, started originating myself. And I was hired on by Castle and Cook Mortgage. And I really liked Castle and Cook Mortgage because they're not a broker. They are a direct lender, so we lend our own money. It helps just kind of, we're not too big, not too small. So we can close loans as little as 2 weeks. And, you know, they do VA, conventional, FHA, USVA, jumbo loans. And then we also do non-conforming loans. So there's just more products available. And so that's my story. That's what I do.
All right. Well, thank you very much for sharing that. Now we'll get down into it. What are some of the biggest challenges that you've seen with entrepreneurs trying to purchase a home?
So that's a really good question. What I find is that, you know, entrepreneurs, business owners, we call them self-employed borrowers. And it is a myth that they have more struggles than just the regular W-2 employees. So they have access to all the loans that W-2 employees do. We just have to look at extra documentation. And so what I always recommend to folks is speak to a lender beforehand, especially if you're self-employed, and get pre-approved. That way you don't run into any issues later. And what you want to get all your ducks in a row, if you will. What the lender is going to look for is if you pay yourself a pay stub, we'll need 30 days worth of those pay stubs, and then 2 years of W-2s, and 2 years of your tax returns, personal and business. So that's important as well. We need a minimum of 2 years employment history for your self-employment business. If you've only been self-employed for 1 year, you just have to wait an extra year till you file those tax returns, because that's how we verify your income. And then we'll also ask for your personal bank statements, just 2 months of those. That's like checking, savings, investment accounts, retirement accounts, and then 3 months of your business bank statements. So if you have multiple businesses, it's important not to commingle funds. So don't commingle your funds in your personal, and try not to commingle the business assets. You want to keep those separate, just because it helps when underwriters review those assets and no red flags are raised. What else? We'll need an ID. And then we'll also need to be able to pull your credit. And that's where we'll ask for your sensitive information, which is your date of birth and social. And the reason why it's important to pull credit is because your credit determines what loan you're qualified for. But really, it's kind of a myth that business owners, entrepreneurs are not able to get a loan like everybody else. And so that's where we just kind of get rid of that gray area and help folks. I also recommend working with a certified public accountant because they're the best at tax returns, especially for business owners. So you can be a sole proprietor, you could be in a partnership, you could be a shareholder, and you could have your own corporation. They're the experts at taxes. And then loan officers, processors, and then the final eyes when you're getting a loan is the underwriter. And we review that income that was prepared by your account.
Okay. All right. Well, thank you for that. Yeah, that you covered a lot of different things there. Now, one of the things I really wanted to touch on that you mentioned was the W-2s.
Right.
With the W-2s, I know if you're an LLC, and I think this applies across the board, but if you don't you don't collect a regular payroll. So what you do is you
Okay.
do owner's draw, where you're just taking cash out so often and just paying to yourself. So there's not a, I mean, it still should be recorded in your records or whatnot, but you're not with taking a standard W-2. How how is that different, or what does that look like? Or do you recommend that a business may convert to an S corp where they start paying themselves a regular salary, or if or if it's okay to have those just owner's draws taken?
So we work with both. So in a sole proprietorship, when the owner just draws from their company,
Hmm.
that's what I normally see on a Schedule C. And then what I do is I take that adjusted gross income of your annual income,
Hmm.
divide that by 12, determine your monthly income, and that is completely acceptable.
Okay.
Um, However, if you want to pay yourself and have a pay stub and a W-2, work with your accountant on how to best do that. But you don't necessarily need to pay yourself a W-2 for your own business.
Hmm.
You can just, it with corporations and partnerships, I'll need all of your K-1s. And so when I review your K-1, that's where I see the distribution that
Hmm.
you paid yourself, which is the draws.
Get it.
Yeah.
Okay.
So
Yeah,
that's
yeah, that makes total sense. So it is possible. You don't have to have the W-2s. You can have the owner's draw. The thing is, you just have to have clear records of those payments to yourself. And like you say, you'll see that on the K-1 as well
right.
when those come through. All right.
Awesome. And also, we have self-employed borrowers that are investors and they own investment property.
Mhm.
And we can get their investment property income. They might cash flow pretty heavily, especially right now for investors. We can use the income on the Schedule E to qualify. And that could be their only income that we qualify them for to purchase a home.
Okay. Now here's a question for you on the other assets your business may have that may be on your credit. So let's say for me, I rent a couple of vehicles out on Turo, right? And I do generate an income from that,
Mhm.
but they are on my personal credit. They're not on my business credit.
Right.
How does something like that work with when you're trying to get qualified? Does that count against your DTI personally, or do they consider that the business is paying for it? How does that work?
Right. That's a really good question. So as long as you claim those assets, the cars or whatever business liability that you have on your tax returns and
Okay.
expense them,
Uh-huh.
and you're paying the bills, not from your own personal checking, but
Mhm.
from your business assets, and you have 12 months consecutive on-time monthly payments, then I can count that liability towards your business and not towards your personal debt to income.
Okay. So that's really important for someone doing Turo, or even starting where you're doing Airbnb with a
Right.
property, something like that, where you need to have 12 months established showing that those payments are coming. Even though the loan is in your name, you need to be able to show that those payments are coming from the business for at least
Mhm.
those 12 months prior, as opposed to your business.
Yep. And so as long as you don't commingle the assets, it makes the auditing of everything very clear
Mhm.
and easy to do.
Yeah, and I know that is something that a lot of beginner entrepreneurs tend to do, where they commingle funds, and
Mhm.
not realizing that if you do that, you're really putting, I mean, not just for even a mortgage, but taxes, IRS, everything
Right.
comes into
It's
play when you
tricky.
start doing that. So yeah, so it's really important. I know we've had someone on to talk about that and how easy it is just to have a separate bank account and to have a QuickBooks account, or there's several other accounting tools out there now to track those things, but sometimes people
Right.
still just, oh, you know, it was just so easy to just do it this way. And it's like, well, it's not so easy now.
Right. Yeah. I know. You just kind of have to just be prepared. And so you don't know until you know. Like we had that conversation before we started the video, is you don't know what you don't know.
Right.
And that's what we're here for, is to help you for sure.
Right. Oh, great. Now, is there anything, I know you probably answered most of these already. Are there any other things that that can mitigate problems with applying for a mortgage for entrepreneurs that they may not be thinking about, that you may know about, or things you've seen, even if it's rare that you see them, just
Right.
something else that may help them as they are moving towards purchasing a home?
So what I have found, especially during COVID, Fannie Mae and Freddie Mac had kind of rewrote the guidelines for self-employed borrowers.
Mhm,
And so at this time, we require also year-to-date profit and loss statement.
mhm,
Those can be self-prepared, but they also can be prepared by an accountant. And that's the preferable way.
mhm,
So, and I also recommend, the IRS did get behind.
mhm,
So for self-employed borrowers that were mailing their tax returns in,
mhm.
we're seeing that some of those haven't even been reviewed, and they were mailed in May of 2021. So the IRS is just a little bit behind. So whenever possible, work with a professional accountant to
Mhm,
get past those roadblocks. Because what we require is a copy of your IRS tax transcript. And whenever I work with self-employed borrowers, mistakes can happen.
mhm.
And even if you work with an accountant, they may forget to file your extension, file your amendment, and then the IRS doesn't have your tax transcripts. So you can easily order your tax transcripts from the
Mhm.
irs.gov. And then it's just kind of FYI, your taxes have been filed with the IRS, even though your lender is going to have to order them for you to verify your income. You just know yourself, you have that peace of mind that that won't be a hiccup for you.
Got it. Okay, next question. Now, I know for a W-2 employee, right? So say you're collecting the W-2, and then you have where you're an S corporation, so you have the W-2. Is there a problem with just giving your W-2s, or do you also have to, what do you have to show on the business side? Because you still have the business itself, and maybe
Right.
you get some kind of dividends as an owner or whatnot, but you
Mhm.
have your regular payroll that you're receiving. How does that work for someone who may have, like I said, an LLC wouldn't have that issue, but for an S corp, you could potentially have where you're receiving that payroll regularly.
Right.
And you're also getting something where we're showing your K1, I imagine, but I didn't know how that works. If it's just still you just want to see the business since that person owns the business, or does the W-2 itself, can that count as your proof of income alone, standalone?
So if you own the business or have a percent for ownership of the business, if you own 25% or more of the business,
Hmm.
we need the complete tax return.
Okay.
Otherwise, we just get your K1. But regardless, for a corporation, we'll always have to review the K1s.
Hmm.
But if you own 100%, then we're going to need the K1, the complete business tax return, your W-2, your most recent 30-day pay stub, and your year-to-date profit and loss statement. So for self-employed borrowers, there's just a lot of paperwork.
Hmm.
And just because we have to, dot all of our I's and cross all of our T's.
Oh yes, absolutely,
Yeah.
absolutely. Yeah, and it makes sense that there would be a lot of paperwork, and that's why it makes so much sense that when people are running their own business, that they keep track of everything and basically
Right.
have some kind of, not just have receipts stored in a drawer or some spreadsheet put to the side, actually have
Mhm.
things that separate all of those expenses and everything so that it's easier when you're trying to purchase a home to just be able to print those reports down to provide them to you all.
Exactly. And if, even bookkeepers can help you with that, and accountants for sure can help you with all that paperwork.
Well, thank you very much for your time, Rebecca. This has been awesome. I mean, I think this information is really going to help a lot of people. So, especially with trying to purchase a home, it's actually some of this information I didn't even know. So,
Oh, that's
so
great.
yeah, so it's been news for me too. So, yeah, so it's really great that you're able to come on and share your knowledge with us today. Now, for
Thank
people
you for
who
having
want,
me.
oh, yes, you're very welcome. Now, for people who want to reach out to you, maybe they have questions about getting ready to purchase a home or ready to purchase a home, and they want to get pre-qualified, what's the best way for them to reach you?
So they can reach me on my cell, 720-280-6013. I do have a slide here
Okay.
with, let's see, I did prepare slides for today, but
Oh yeah, if you like to go ahead and share those with us, go right ahead. The more clear we can make the point, the better. So yeah,
awesome.
absolutely.
Well, I'll just share how to get in touch with me because I think we hit on mostly everything.
Yes,
Um, do you see my screen by chance?
I don't see it yet.
Okay. Fingers
Okay,
crossed.
it's coming up now.
Yay.
Yeah.
Okay. So I also have a website. It's RebeccaMillikenMortgage.com. And then if you could just take your cell phones and scan that QR code,
Mhm.
that takes you directly to our mortgage app with Castle and Cook Mortgage. And that is a really convenient tool because you can upload your documents securely
Oh,
from your phone.
nice.
Um, and you can also have access to a really convenient mortgage app that you can plug in information about a home that you see that you're looking at with your realtor, enter, the purchase price amount, the down payment amount, and then it calculates your estimated monthly mortgage. So it's super helpful.
Yes. You gotta love technology. That's just brilliant.
Yeah, yeah,
Super easy way to do that.
exactly. So I'll stop sharing.
Okay.
Okay.
All right. Is there anything else that you'd like to share with us before we end today?
No, that's it. Thank you so much for having me.
Yeah, thank you very much for coming on. And until next time, this is Galt.